Hello, I am Jim Malackowski, Chief Executive of Tomo, the nation's leading intellectual capital merchant bank firm. On behalf of each of my partners and colleagues, I would like to spend a few minutes to share with you our semi-annual update highlighting our view of the intellectual property marketplace, select accomplishments from 2010, and plans for 2011. Over the past quarter century, IP business activity generally, and patent litigation specifically, have been recession-proof or even counter-cyclical. Although the most recent recession has been declared officially over, it is now clear that IP is today closely integrated with the economy overall, as the market for intangibles and related enforcement first suffered and then rebounded during this past economic cycle. Earlier this month, Tomo held its firm-wide year-end meeting at our offices in Chicago. At that meeting, Michael Friedman, head of our investment business unit, shared his views on the interplay between IP and the general economy. I've asked him to join us today to share with you a few of the insights he provided to the entire Tomo team. Michael?
I would like to briefly focus on the importance of innovation in the context of our current economy and, perhaps more importantly, in the context of the secular economic problems facing our country. At Tomo, our analysis starts with a review of the 20-year history of the S&P 500. Most notable are the bubbles that occurred in the dot-com stocks from 1996 to 2001 and within the subprime market during the period 2003 through 2008. In both cases, policymakers chose to inflate rather than grow the economy based largely through the use of low interest rates. The recession of the early 90s led to the easy money dot-com bubble, and when that popped, low interest rates inflated the subprime bubble. Importantly, the subprime bubble and the resultant global financial crisis were unique in that governments around the world believed that to move the world from recession, massive amounts of private debt should be moved to the public balance sheet, the balance sheets of the world's sovereign nations. A simple review shows the growth of the U.S. Federal Reserve's balance sheet since the beginning of the subprime crisis. Private debt, now held by the Fed, coupled with the U.S. government debt, now exceeds $2.5 trillion and is projected to exceed $4 trillion by the end of 2011. The Federal Reserve is now the largest holder of U.S. government debt, exceeding even China by an amount that will exceed $100 billion by year-end. The result of such policy is creation of a phantom wealth effect, not economic value. Coupled with the offshoring of U.S. manufacturing and service capacity, the U.S. standard of living has actually declined. As shown, the arguable result of this bubble inflation, by means of monetary stimulus, quantitative easing, and some fiscal stimulus, is an economy that is making a cyclical improvement as we move into 2011. Within Tomo Investments, we have summarized the economic headwinds and tailwinds that should result in 2011 U.S. economic growth of about 3%. While positive overall, attention should be placed on the three factors in red. Each is a secular as opposed to a cyclical problem that must be confronted by a directed fiscal policy if we are going to change the economic course of the nation. Whether we are talking about substandard GDP growth, the budget deficit, or unemployment, the U.S. economy will not regain a strong footing unless there is growth in the absolute level of jobs and in high-quality innovation jobs in particular. It is this recognition of innovation as key to the recovery that draws the attention of Tomo professionals. We believe there is a clear hierarchy of job quality from an economic perspective. By that, we mean jobs that provide a high standard of living for employees and protectable barriers to entry to maintain those jobs. Historically, the U.S. was a manufacturing country, but as time moved forward, particularly over the last 50 years, the U.S. also became a leader in the provision of service and innovation-based jobs. As the world is globalized, manufacturing jobs have left the U.S. for countries with lower unit labor costs. As these jobs left our shores, Job capacity was absorbed by the growing service industry that is now itself being outsourced to emerging market countries. So, what does this nation do about the absolute loss of jobs and quality jobs in particular? How can the U.S. fix its secular unemployment problems to drive a greater economic growth rate and reduce the deficit and change secular economic trends? The solution, our line in the sand, has been and will continue to be our ability to innovate. American innovation, and importantly, the intellectual property which protects it, not only creates economic value, but employs people in high-paying, high value-added jobs. Although necessary, this will not be easy. The landscape has changed dramatically over the last few years as emerging market countries have utilized trade surpluses to implement national policies, growing their middle classes, and becoming strong innovators in their own right. To compete, the U.S. must implement structural change through a fiscal policy that supports innovation. This will drive reemployment into high-quality, high-paying jobs that put Americans to work and keep us competitive. We need a Manhattan Project, like China's announced $1.5 trillion plan, in structural investments that can create high-paying, competitive jobs and keep the country on the leading edge. Targeted industries should include information technology, high-end equipment manufacturing, biotech, advanced materials, electronics, alternative fuel cars, and clean energy. We need high-quality jobs, not the jobs we're creating. By using the U.S.'s strategic lead in innovation and appropriate IP policy, we can restore the economy and put people back to work.
Thank you, Michael. Over the past year, we have continued to refine Ocean Tomo's services, reflecting our view of the opportunity for IP financial markets in light of the larger macroeconomic conditions. We believe such refinements provide for a higher order integration of our products and services for the benefits of our clients across all 5 Ocean Tomo business corridors: expert services, research, investments, risk management, and transactions. Expert services. With a surge of activity in the fourth quarter, the number of patent litigation filings, excluding false marking cases, exceeded comparable numbers for 2009. Our own expert testimony business unit, led by Andy Carter, saw similar growth, especially in our newest offices in Boston and Houston. Importantly, not only has the number of IP damage expert assignments increased, the amounts in dispute have grown significantly. Behind the scenes, Ocean Tomo experts have become much more active in assisting the nation's most prestigious law firms to assess the risk and potential recovery before a potential case is filed. Our valuation team has seen renewed activity driven by plans for corporate M&A. Consistent with Michael's market forecast, we anticipate that M&A activity will increase in 2011. This is especially true across many of the sectors of greatest interest to our clients, including high-tech and media. As IP is the key value driver in these industries, our valuation team, led by Roy D'Souza, has seen meaningful demand growth for both qualitative appraisals and objective quantitative assessments of IP, benefiting existing negotiations or otherwise helping to establish a fair offer price. Here, there is a natural integration between our valuation team and our research business unit, which features Ocean Tomo Patent Ratings Software Analytics. Research. The number of top 25 global patent issuers who rely on Ocean Tomo Patent Rating software continues to expand. We are also seeing greater interest by law firms seeking to more fully understand the patent landscape and patent quality as they guide their clients through complex patent prosecution and maintenance decisions. Investments. As is our annual practice, at the end of October, the new constituent companies contributing to the Ocean Tomo 300 Patent Index were announced. With a market value of approximately $5.5 trillion, IP is the largest U.S. asset class, with the Ocean Tomo family of equity indexes continuing to provide an important benchmark to the role that IP plays in the economy. Outside of the firm's public equity offerings, our investments team has concentrated their efforts in the second half of 2010 around IP-based investment banking activity. We expect this focus to continue throughout the next year. Risk management. Patent licensing and enforcement companies, or PLECs, continue to challenge operating entities reliant on a growing mesh network of technologies for new products. The continued demand for accountability by shareholders only exacerbates these trends. Ocean Tomo Risk Management offers the industry's only solution to holistically address third-party patents and royalty stacking, the Patent Royalty Trust. With initial Patent Royalty Trust fairness opinions now complete, we will be holding a 2-day off-site meeting in mid-January for senior IP officers and their risk counsel to discuss the benefits of such a holistic approach. Participation is limited. However, if you are interested in attending, please contact Justin Lewis in our San Francisco office, who is directing these efforts. Transactions. New for 2011, our Transactions business unit now includes a dedicated office to help clients evaluate monetization opportunities across a range of options, including IP auction or private sale through ICAP Ocean Tomo, offering of a unit license right contract on the Intellectual Property Exchange International, or secured investment capital. Ocean Tomo's leadership view of such options, combined with our proprietary analytics, provides clients with a complete assessment of opportunity. If you have intellectual property you wish to monetize, please contact the firm's general counsel, Joel Lutzker, or send a request to speak to an Ocean Tomo professional at transactions@oceantomo.com. Administratively, 2010 was also a busy and productive year. Most notably, Jake Galliard joined Ocean Tomo as President and Chief Operating Officer. With significant financial service and public company experience, Jake has gone to work to drive the firm's revenue growth. His efforts began by expanding our sales team, including new client relationship managers on the West Coast, as well as dedicated sales efforts for select practices, all under the direction of Molly Keelan. Personally, I am pleased to share with you that I have begun a 1-year term as President-elect of the Licensing Executives Society International, preparing me to assume a role as President of the organization in the fall of 2011. In this regard, my initial attention is focused on organizing a first-ever meeting of non-government organizations whose agenda include the business of intellectual property. This Global Technology Impact Forum will be held on January 24th and 25th, 2012 in Geneva, Switzerland, immediately before the Davos Economic Forum. Already, more than a year out, we have had boards and executive leadership of more than 20 organizations indicate their planned attendance. Several of these groups will serve as a strategic partner for the event, including the World Intellectual Property Organization, the International Chamber of Commerce, and the World Trade Organization. Concurrent with the forum, the Invent for Humanity Technology Exchange Fair will host care organizations from around the world seeking technology assistance, as well as leading innovation providers willing to contribute. LES professionals and IP valuation experts from around the globe will be attending and donating their time to facilitate. I encourage each of you to become involved in this game-changing event. Please contact me directly at gtif@les.org. On behalf of everyone at Ocean Tomo, we wish you, your coworkers, and your family the very best and continued success in the new year. Thank you.